Hi, this is PR Sundar. Welcome to this special episode. I am going to share some strategy. Number one, and people say, sir, we don't have so much money to attend your workshop, but you don't have to attend my workshop. Here and there, sometimes I give some strategies free in YouTube. Number one, I am not a SEBI registered guy. Number two, even if I am SEBI registered, there is no guarantee that the market will give correct result for our strategy. Market is market. So please understand, there is a risk, there is a reward. And therefore, whatever I am sharing, you take it as an educational purpose. And many people, they do paper trade to see what I am saying, is it coming right or not. And if you can remember, I shared a strategy in Bangkok conference, and that I shared in a YouTube video, and that has given excellent results. Last month, I think about 1 month before, and I shared a strategy, that time market was bullish and 19,000 is the support and 20,000 is the resistance. So I sold 19,000 put, sold 20,000 call. Since I was bullish, I bought some call options. And if you have not seen that video, you can see here. And that strategy has given very good return. I follow some technical analysis. So I'm going to show you here. So this is a technical analysis. So where there will be 3 lines will be there. Maybe I can just show you the past performance. As and when these 3 lines turn green, market is long. As long as these 3 lines turn red, market is short. But sometimes, technical analysis is just a guideline and that can also fail. Sometimes the stop loss can be hit. Maybe I just show you, okay, see here the 3 red line came, market fell. 3 green line came, market went up. And 3 red line came, but market came down only a little bit, not so much. And my 3 green line, market went up. And 3 red line, market came down. And now see 3 green line came on 5th of April. Then that time you can see here on the right hand, Nifty was at 17,500. From 17,500, all the way Nifty went to 20,000. So this technical analysis captured 2,500 points. And now this day all 3 turned red. But that time I said in my YouTube video, let us give a chance one day, because that day night there was Apple result, Amazon result, which was about 17-18% weightage in US markets and few other things. But although it showed negative, but markets went up, it is only yesterday, that is of 17th August. Today it is 18th August, but as of 17th August, so these all 3 lines turned red. So that means as of 17th August, markets have turned bearish. And again, people who are asking me, sir, what is this technical analysis? We cannot reveal all the secrets, because if we reveal all the secrets, who will be attending our workshop? So you want to know what technical analysis this and that, so you may consider attending our workshop so that we can make some money. Very simple. Earlier, I was bullish, now I am bearish. And if you can remember, this is a strategy I showed in the video. That was a ratio in August. So that time you may remember 20,000 was the resistance, so I sold 20,000 call, 19,000 is a support, I sold 19,000 put, and then I bought 18,900 call. And this one was done on 10th of July. Again, I remember, just for the sake of convenience, I use the word I did, but this is a paper trade. I did not take the real trade, I just took a paper trade, because as per SEBI order, I am not supposed to be trading in Indian markets for 1 year. And many people still say, sir, we don't believe you, sir, you are still trading. Myself, my wife, my company, all 3 PAN number, okay, will be blocked at the exchange level. So even if I want to trade, even if I place the order will not go. So when there is a SEBI rule, okay, you have to follow that rule. You don't follow, the consequences will be even bigger. So therefore, this is just only a paper trade just for education purpose. So now what has happened? Okay, you can see here, this position was taken in 10th July. If you look at the chart, around 10th of July, so market was here and the market was still bullish. You can see 3 green line. So market was still bullish. So therefore, I have taken a bullish view. I have taken the strategy. But now what happened? On 17th August, and the markets have turned bearish. So what is the right thing to do? If you have a bullish strategy and then markets turn bearish, what is the first thing you have to do? You have to exit the position. So that is what I have done here. And you can see here, there's a red color button. That means I exited. So I exited at 17th August closing price. The system is showing about 42,000 rupees profit. And if you analyze the trade, so since it is closed, nothing will be shown. So the margin money was around 5.5 lakh and there is about 42,000 profit. So that has given about 8% return. In between the profit was more than 10-11%. But the thing is, how do you know? You cannot be like, by thinking that we got 50,000 profit, you close, who knows, the profit may be 60-70,000. So once markets turn bearish, that is the time you have to get out of this position. So I got out and I made 8% return in a matter of about 5 weeks, 10th of July to 17th of August. So it's about 5 weeks. 5 weeks, about 8% is a fantastic return. Now what are we supposed to do? Now it's time to take strategy with a bearish view. As of yesterday, I've taken this strategy and wow, just yesterday only I took the strategy and now it's giving 3,260 profit. Unfortunately, this is a paper trade, so only a paper profit, we cannot do anything. It's not a real profit. But let me show you what I've done. So the first thing is that though market have become bearish, I am still of the view that 19,000 is a support and 20,000 is the resistance. So therefore what I did, I sold 19,000 put option 3 lots and 20,000 call option 2 lots. Same thing, earlier also I sold 19,000 put 20,000 call, now also. But what is the difference? Last time it was the beginning of July, I have done it in the August series. Now it's almost close to the end of August. September is also like 1 month plus 1 or 2 weeks. So therefore I have gone to October series. So always trade in 2 to 3 months away so that the gamma effect will be less. So I sold 19,000 put and 20,000 call because I am still of the view that 19,000 is the support and 20,000 is the resistance. But because the markets are bearish, so I bought a put option. And see, today, just in 1 day, so it's giving 3,260 profit. You analyze the trade. First thing is that the probability of profit is only 66%. But you want 99% probability, your profit will be very, very little. You want 100% probability also, there are some trades. No trade, you put the money in bank FD. So, higher the probability, lower the profit. So, we have to take, reasonable risk to make a reasonable profit. Now, look at the break even. The break even is 18,300 to 20,200 approximately. 18,300 is a very good support. Okay, lower break even. And then if you look at the chart, okay, your range is 18,300 to 20,200, but you make more money when the market falls. So this is a bearish strategy. So when the market comes down, you make more money. Otherwise, market goes sideways, because of time value, you make money. Then 19,000 put is giving 3,500 rupees loss, but that was compensated to some extent by 20,000 put profit. And also 20,000 call has given profit in just 1 day. The margin money, although it is showing 2,43,000, the Opstra, the margin money is not accurate. If you want to know what is the actual margin, I will tell you. This money minus this one. So this is the total margin you require at the time of placing the order. But the next day, this amount will be given back to you. So your net amount is only 2.25 lakh. But here, the percentage of profit will always be shown based on 243. But actually your investment is only 2.25. So therefore actual return will be slightly more than what it is showing. So the technical analysis showed me short And then I took some bearish position in just one day and I'm getting a profit of more than 1.25%. And then we will see how this goes. This is just for sharing. Now, few important things. Number one, different people have different objective, different risk appetite. So this strategy carries unlimited risk. If Nifty goes to zero, you may lose even lakhs and lakhs of rupees. And if Nifty goes to 20,000, again, 21,000, 22,000. So number one, option trader, is a double-sided knife. So market goes down drastically, also you will make unlimited loss. Market goes higher drastically, also you make unlimited loss. So that is number one. Of course, if you want to keep your losses limited, so you can always buy the hedges on both the sides. But this strategy is given for the people who can take a high risk and typically unlimited risk. I don't know, but sometimes the word we use unlimited, okay, I only, I went to a business channel, the anchor was introducing me, he is Mr. PR Sundar, option seller. I remember option selling as unlimited risk, but the same thing they don't talk about futures trading. Futures trading also as unlimited risk. Okay, anyway, so that is not the topic now. So number one, I came out with a video about 1 month before. That time I was bullish, and so I closed that position, and now I'm coming out with another strategy with a slightly bearish view, and this is the strategy. Again, I repeat, I am not a SEBI registered person. You consult your financial advisor before taking any position, so this is for education purpose. And then number 4, technical analysis also can fail sometimes. So the positions I've taken is based on the technical analysis. So hope you enjoyed watching this video. Thank you for watching.